And in today's episode of Please Don't Ignore This, Don't Dismiss This, and whatever you do, please take the time, at least try to understand what's happening with progress around artificial intelligence, specifically as it relates to Tesla. Or don't. But if that's the case, send me a DM in 10, 15 years time on X so I can point and laugh and refer you back to this video. Wait, did I really say that? Yes, I did. Today, in their own words, Cathie Wood and Brett Winton of ARK Invest share their research around artificial intelligence and have a lot of thoughts as it specifically relates to Tesla.
And so this chart shows kind of a forecasting site's estimates for when artificial general intelligence will be available and demonstrated. And it has a very specific definition for artificial general intelligence because people tend to move the goalposts here, but it's basically like, could you be in conversation with one of these things for 2 hours and you couldn't tell whether it was human or not? Conversation or images or typing or text. Can it put together like a really complicated kind of model car, meaning like you go from instructions, think of this like the IKEA furniture test. Could an AI system like actually take the IKEA instructions, even more complicated IKEA instructions, and successfully put together the cabinet for you? Because I fail on that, call it 50% of the time. And then the third is like how in a bunch of different expert areas can it pass the equivalent of certification tests for like the medical licensing exam for lawyers. And so is it basically at a higher than human level or 90th percentile human level in a bunch of different expert areas.
So just to take a quick pause here, note, Brett is currently describing impressive general capabilities of artificial intelligence, hence artificial general intelligence. Extremely useful, not specialized, but broad capabilities. And as ARK records this, expert, using the term loosely and possibly pejoratively, consensus forecast for when this will be possible / achieved, 8 years away. 8 years away, as in less than a decade. However, if we rewind just a little bit, consensus expectations in 2019, 80 years. The trend for these expert predictions seems to suggest that with each new AI breakthrough that's seemingly coming out of nowhere, suddenly consensus expectations for artificial general intelligence become much sooner than they previously were. We've seen a 10 times decrease, an entire order of magnitude in consensus expectations for when artificial general intelligence systems are achieved between 2019 and 2023. So if the forecasting error continues, could be as soon as 2026, and worst case, if the forecast is now well-tuned, 2030. So between 2026 and 2030, I just want to emphasize, there is an enormous opportunity here for companies with fingers in the AI pie, especially companies deploying AI widely at scale, generalized solutions with capabilities that today may not quite be human level, but between 2026 to 2030 may become human level and then beyond. The opportunities here are absolutely astronomical, which is again why I implore everyone watching, please try to understand this. Don't ignore it. You don't have to draw the same conclusions, but please, I'm begging you, don't dismiss this without trying your best to understand the potential implications. Even the experts have been getting it wrong by a massive margin. Back to ARK.
And so in the chart, you can see just in 2020, we thought this capability was 80 years away. And with each subsequent advance in GPT-3 and what Google is demonstrating through DeepMind and GPT-4, suddenly it's like, oh gosh, this is closer. It goes from 80 to like roughly 30 years to 20 years. And now here we are today, and it's by the end of the decade. And that's even if the forecasts are well-tuned now, but the odds of Meta coming out with a model that blows people's minds, or the next OpenAI model coming out and being like, whoa, this is even more performant. I mean, they seem roughly higher. So like if you adjust for the way the forecasters' expectations have drifted, it's really, before the end of the decade, 2027, 2028, you should have these wildly performant models that don't just impact, hey, I can chat with a chatbot and it's compelling, but also will improve the capabilities of humanoid robots. Also will make it more likely that we can identify the key molecules in any rare disease and target a drug right after them efficiently. That will make it more likely that we can develop and audit like broad-based smart contracts that will allow financial functions to auto-execute without needing kind of a central counterparty like a bank to extract its VIG for facility.
Wait. Now, I thought that they'd be talking about Tesla. Pro tip, I searched the transcript for the word Tesla. Haven't actually watched this yet, but hello. Did somebody say X, the everything app, financial services, disrupting the financial industries, the banks? I probably wouldn't recommend sleeping on that opportunity either, although I can't currently invest in X. I'm just saying though, don't be surprised if a decade or 3 from now, X happens to be $1 trillion+ company as well.
Transaction. And so kind of it should accelerate certainly AI and our expectations for AI and kind of all of the technologies that we focus on. And so, Cathie, do you want to talk about kind of like the macroeconomic potential impact here?
Sure. Yes. It's very exciting. This chart came out of our big ideas last year. And what you see here is the impact of technology on real GDP growth when there are big breakthroughs. And so, as Brett mentioned, the breakthroughs in the early 1900s, telephone, electricity, internal combustion engine, created a step function increase in growth. And you can see it here. The previous years, back to the 1500, the average real GDP growth rate, we think, was, and Brett did this research, 0.6%. There was a 5-fold increase in growth thanks to those 3 major platforms. And we ended up at 3% growth on average for the past 120 years. And you can see now what forecasters are expecting from now until the year 2040. They expect a deterioration in growth from that 3% range to 2.6%. And what do we expect? Well, we believe these 5 platforms are much more provocative, and especially with AI, the primary catalyst or the biggest catalyst, that the step function in growth could be quite significant. We've held ourselves back here. This is a log chart. We've held ourselves back here, and you see 8.5% is the expectation. But just think about that. Do you hear any economist out there? This is real GDP growth. Do you hear any analyst or economist out there assuming that real GDP growth will move to the upper single digits in the years ahead? No, I don't hear anyone saying that. Now, one way it could happen that would take nominal GDP growth lower is if prices were to come down fairly dramatically. And we're seeing in artificial intelligence on the training side, costs are declining 75% per year. We thought just 2 years ago, we thought it was 60%, now 70%. And then on the inference side, we're seeing cost declines per year of something north of 85%. So this is a massive deflationary force that we think is going to sweep around the globe.
Just want to jump in here again and ask a simple question. Does anyone watching happen to know any companies that happen to require the training of AI, of which costs are declining even faster than what ARC already thought were very bullish estimates? Same question, anyone know any companies that do any inference with AI? Because if such companies existed and experts were kind of missing the mark and cost declines were kind of important, a lot of training and inference was necessary, such a company might get a lot more bang for buck than people realize and have a lot more capability of deploying incredible technology, AI, at scale than people are currently anticipating, which might suggest that there could be an opportunity that people aren't widely recognizing if only such a company existed. Anyone know any such companies? Please let me know in the comments below.
And maybe nominal GDP growth will be, 6%, with prices falling by 2.5% per year and getting us to that real GDP growth of 8.5%. Brett, I don't know if you wanted to add anything more to that slide.
Yeah, I think just generally it is consistent with economic history that you hit a technological transition and then the natural rate of growth of the economy shifts in a structural way. So just on the long historical perspective, you'd say, hey, it looks like that could happen now. And you could have also said that 10 years ago and it didn't yet. So the reason I'm more confident now is not just because of the long historical perspective, but also because of the practical impact of the technologies that we are seeing today. If you look across, like if our expectations about Robotaxi are right, and now it's very clear to me that this is a when, not if system. And it's a question of how quickly they can scale, and can Tesla do it on its footprint, in which case they should be able to scale very quickly. That would be number amongst the most meaningful, macroeconomically impactful technologies of all time, including like comparable to the steam engine.
Were you listening? Firstly, Brett says that autonomy is a matter of when, not if. It's now inevitable. I agree. He also mentions that if Tesla can scale in their existing footprint, as in 5+ million vehicles on roads with an over-the-air software update, e.g. the Robotaxis awaken with the press of a button, he's talking about, in fact, let's just listen again to exactly what he said. Please pay attention.
Number amongst the most meaningful, macroeconomically impactful technologies of all time.
Translation, a fuck off massive $sign. It's about as simple as I can say it. Colossal opportunity. Please don't sleep on this. Try to understand it. Just do your best.
Including like comparable to the steam engine in terms, and it fits into a framework where it will clearly be recognized into the macroeconomic statistics, where it's like consumers will decide, rather than, driving the vehicle they have in their garage, they'll pay for this service. And so a previous behavior, driving, that wasn't recognized in markets because I'm not getting paid for being a driver, even though I'm an amateur driver all the time, suddenly becomes something that people are paying for. And so it'll flow through into kind of the production output and into the income statements of those autonomous platform providers. And so kind of you stack up that and expectations for robotics, and even marginal, much lower than we have expectations for AI and AI software, and you end up with a GDP growth that's consistent and even in excess of what's implied by this slide. And so I think that there's a lot of compelling evidence that this decade is going to be remarkable from a macroeconomic perspective.
Right, and it should translate into very nice returns for these technologies. As you can see, if you look at the market today, roughly 19 trillion of the 117 trillion in global equity market cap is associated with disruptive innovation. So let's say a little more than 15%. If we're right, and with Brett's guidance, our analysts have built the building blocks for us to be able to say this. If we're right, that 19 trillion is going to scale to 220 trillion during the next really 7-8 years.
Hold up a second. Now, were you listening? Equity market capitalization estimate for 2023, 117 trillion, growing to 360 trillion. ARK's estimate in 2030. But wait, there's more. It'd be a little crazy to assume that this value would accrue evenly across companies, right? There's probably going to be some winners, some losers, some who take an outsized share, a pretty decent slice, and others who get a few crumbs, some leftovers. So once again, I do recommend trying to understand some of the companies that may have a potential possibility, at least, just the possibility of maybe getting an outsized share of this colossal opportunity. Call it another $250 trillion, a quarter of a quadrillion in value, up for grabs in the next 7 years. With AI in and of itself, more than half that opportunity. Energy storage, a very decent slice. Oh, and what do you know? Robotics as well. Robotics, AI, and energy storage combined, significantly over 3/4 of the opportunity here. If only there were some companies with fingers in all of those pies. That would be quite the opportunity.
7 years. So that's a 42% compound annual rate of return. And whereas the rest of the world, we see appreciating little or nothing at all. Why would that be? It's back to that creative destruction. The traditional world order is going to change radically. And the traditional benchmarks, the broad-based benchmarks, whether it's the S&P 500, MSCI World, and the NASDAQ, for example, they're not going to be able to keep up with this. And one of the reasons we learned an important lesson from Tesla, the S&P did not put Tesla in that index until it had hit $500 billion in market cap. Why? Well, two of their criteria are a 4-quarter moving average of profitability with the last quarter profitable. Well, Tesla didn't hit that, I think, until 2020 or 21. I forget. I think it was 21. Was it, Brett?
That sounds right.
Yes.
Sure.
And just think about that. How many companies are bigger than that 500 trillion? And oh, by the way, most people who waited until the S&P gave them permission to move into Tesla are underwater right now because they're...
By the way, pretty hilarious commentary from Cathie there. Obviously, short-term movements, but what she's getting at here, people waiting for permission. Oh, now it's in the S&P. Now it's finally ticking the boxes. It's a safe investment now. Another lesson in the difference between identifying an opportunity ahead of time or waiting until you get turkey slapped in the face with things you could have anticipated but didn't. Of course, these comments have absolutely nothing to do with the potential of Tesla's fleet of robotaxis awakening, nor their humanoid robot massively scaling up the global labour market. Don't even know why I mentioned those. Let's move on.
As is always the case with disruptive innovation, there's controversy, and it has taken the stock down. So anyway, so we're pretty excited, and as you can see, we delineate those growth rates by major innovation platform, with robotics being the fastest growing. It's also at a very, very low base. Industrial robots in particular, very low base. Whereas AI, 37%, that is off of a substantially larger base. And just to give you a sense of the drama here, even for us, and all we do is focus on disruptive innovation. I believe this was 2020, our expectation for the market cap of artificial intelligence out there in 5 years from now was, I think, $40 billion. Now it's up to $400 billion. I know there's been a tenfold.
AI hardware
yes,
is what you're saying.
The spending on artificial intelligence.
So, not long ago, ARK Invest makes an estimate. Turns out they were off. They underestimated by an actual order of magnitude based on their current forecasts. So ARK, who are often laughed at and ridiculed as deluded, hyper bullish, detached from reality, outrageous, always to the upside, there's no way that's going to happen, that's ridiculous, bro. Just admitting, well, yep, our estimates have increased by 10 times in just a few years. We underestimated. We were way too bearish. Yet the world still points and laughs.
Hardware. Yeah. And I think it includes the software too. Am I right?
No, this is just looking at the accelerator. So if you look at the accelerators in the data center and what we were expecting to be spent on accelerators in the data center, we previously approached it and said, okay, well, this is how much is spent on servers, and this is the share of servers that are going to be devoted to accelerators, and then the subset that's going to be spent on accelerators. And we ended up with a $40 billion number. Now AMD is saying that, hey, we think that there's going to be $400 billion by, right, I think it's 2027 spent on accelerators. And we have an in excess of, I think, $1.4 trillion on accelerators by 2030 is our official forecast, or 1.3 perhaps. But and part of that is like we opened up the model by saying, well, how much value is going to be delivered with AI software? And if I can, just like if I can deliver a robot to an Amazon or to a Tesla, and that can increase the productivity of their manufacturing base by X, they'll spend some fraction of X to install that robot, and then they'll get great ROI. It's the same with software and how it improves me and all of our analysts as knowledge workers. People pay for software that improves worker productivity. And if you look across all knowledge workers, there's almost $30 trillion in knowledge work wages that is going to be paid in 2030. So if you can improve their productivity by multiples and just pay a fraction of that, you still end up with trillions of dollars, and in fact, more than $10 trillion in our estimation, of AI software spend to help knowledge workers. And therefore, you need $1 trillion plus of AI chips to create that AI software. So kind of rather than approaching it from like, hey, this is IT spend and what people are going to do, we approach it from this is the output of the technology that's going to be installed, and therefore the amount of kind of justifiable, really ROI positive hardware we need to support that. And you end up with a much larger market.
So that begs the question, we have been shifting our emphasis from in our various strategies from hardware centric, that would be NVIDIA, AMD, depending on the portfolio, towards software and towards companies that are going to capitalize on the productivity gains that AI is going to deliver. Even though this is a huge secular growth story, there's so much in the way of expectations now being built into the check the box AI. And believe me, it's an important box. NVIDIA has done a magnificent job. We bought it from the time we started the company. We're involved with it when it was $5, and just when we understood, we built it enormously. But it is subject to cycles, and the last one was the crypto cycle. 2017 couldn't get enough GPUs, and there was double and triple ordering, and the stock in the fourth quarter of 2018 was cut by 2/3. Now, that's not going to happen this time because this AI wave is just so powerful. But the expectations do get ahead of themselves. We saw that with, Alphabet, I guess, earlier this week, and AMD, just expectations had gotten ahead, and you're going to have the to and fro. But before we let Brett go, this is a chart that he drew to try and help people understand how provocative these breakthroughs in AI are. And so here it is.
Yeah.
Brett?
So we talk about cost declines a lot at ARC, and on AI in particular, the cost decline is happening more quickly than anything we've ever studied. So Cathie alluded to it, but cost to train a model we think is going to fall by 4 times now. Last year we thought by 3 times per year, prospectively going forward through 2030. And on a real-time basis, costs are falling even faster than that for AI training, which is separate from the cost to actually deliver an AI model, which is called inference, and that's following at 85+% per year. But then that's also separate from what it means for the cost to do something within the business or human context at an in-application basis. And so here we looked back and said, well, what does it cost to produce written material? And if you go back to, it was 1894, and looked at what the Pall Mall Gazette was paying its professional writers to write essays, it was inflation adjusted around $400, $500 a word. And then as you track kind of this data point of what do magazines pay people to write over time, it basically stayed in that spot, or $400 to $500 per 1,000 words, I should say. Mm-hmm. So, a 1,000-word essay, you get $400 to $500. And it's been that way all the way to a few years ago. If you wanted to pay a writer to write a corporate blog post, a 1,000-word corporate blog post, you'd pay $400 to $500 for. It's kind of like at the higher end of the spectrum for what you'd pay for a qualified, experienced writer, somebody that would score well on the graduate level exam, the GREs, for example. Well, then GPT-4 scored basically like 50th percentile on the GREs, and it cost call it. I can't remember what's on the chart, 12 cents? 16 cents per 1,000 words. So you've gone from $400, $500 to 16 cents. Well, then Anthropic's Claude 2 model scored 90th percentile on the GREs, and it cost 4 cents. So we went from something, it was the same amount to produce written content for more than a century. Suddenly it falls 10,000-fold, and it is now going to be on a cost decline trajectory. It's not like it's just going to plane off. Essentially, written, authored material is going to both be ubiquitous and abundant with all that is good and bad about that. As in, you will have your own personal chatbot that you can chat to that will be, really compelling and interesting and have all kinds of information to share with you. And you will be at risk of somebody, kind of like infiltrating you, pretending to be human when they're really not. And so I think that the implications for like businesses, humans, like all of these systems that we use where like kind of written and oral speaking ability is a mechanism by which we verify that this person is a person that I should pay attention to, is just going to get totally turned upside down by this. Mm-hmm. And it's not just going to happen in the written word context. It's going to be image generation. It's going to be kind of ability to look at data sets and forecast the direction that they're going. So kind of like the ability to take like an idea and convert it into something that amplifies and spreads is going to be massively magnified here with all.
So brace for impact, everybody. If the way in which you add value to the marketplace is by using your brain and or your body, eventually AI is going to do what you do better, faster, much cheaper. Oh, and probably a lot sooner than you think. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. It's an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a fuck ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. Certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point. It's something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1 shit, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, Snake Oil Salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link at the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links at the pinned comment. See you over on Twitter and or Patreon, and don't forget to grab your AG1. Love ya.